The sixth and final qualitative characteristic of accounting is understandability. So Q6, the final one, understandability. And that means that understandability requires financial information to be comprehensible to users with a reasonable knowledge of business and economic activities. This can be done by 1, presenting information clearly and concisely, and 2, avoiding using jargon and complex terms. So basically, this bit about reasonable knowledge. So you can assume someone's got a reasonable knowledge of business, not like they know nothing, okay? Because otherwise, nothing would be understandable if they didn't know anything. So we'll assume you're a reasonable knowledge, and that's a very subjective word, so it's open to interpretation. So to sort of clarify, here's some things we could say. What you want to do in business and accounting is present things clearly and concisely. If you gave someone an income statement that looked like this, it's all there. We've got our revenues, we've got our expenses. I haven't calculated the profit, but it's just not set out like clearly and concisely. We don't set income statements out like that. We set them out like this. We put our revenues, we've got sales of clothing, footwear, equipment, total them up. We less our expenses, here they are, total them up, and that gives us a net profit. You often hear in business, what's the bottom line? What does that mean? It means the bottom line is the final line of the income statement. What was your profit? So that should be on the bottom line. It shouldn't be all set out all over the place like this. That's good. Another way you can do it is use graphs and charts. So graphs and charts are great, and you'll be expected to interpret them throughout the year. So we said, here's our income statement. That's great. Okay, but for someone with, a reasonable knowledge of business and accounting, what would be even better than that? Set it out in a graph. Here's our sales. 45% of our sales, so this is the data here. 45% of our sales come from clothing and footwear. We don't make much from equipment. So I can now make a good decision there and go, why am I even selling equipment? No one buys it. I should be selling more of these things. And likewise, we can express our expenses in a graph too. We can see here's our total expenses. There's one big sort of chart there, or one big graph. But yeah, we break it down and go, look, it seems to be most of my expenses are coming from wages and rent. Is there a way I can reduce those? Can I get rid of some workers? Can I rent out a cheaper property? That sort of thing. And the last thing we want to do is avoid jargon and excessively complex terms. Now, we're at the start of the course, so a lot of the terms we deal with to you will be excessively complicated and might seem like jargon. So we're not going to, I guess what we want to ask is by the end of the year, your knowledge is going to be much better. But for the reasonable person, we're not going to use any of these words, maybe goodwill a little bit, but EBITDA, amortization, goodwill, you don't use those terms to someone who doesn't really know anything about business. They're excessively complicated. What we should do is, that's an acronym. Explain what that acronym means. Or maybe, put a little definition of each of these things. And that would, if you simplify language, that's going to make it more easily understood. And that's the key thing about understandability. Can someone comprehend the meaning of what you're saying?